Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. What day is today? I can't keep track of the days. Thursday. Happy Thursday. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Whew. We got to talk about the vaccine stocks. We got to talk about the reopening stocks. We got to talk about Palantir. Chamath is back in the game this morning. A couple of his SPACs are trading higher after they had earnings last night, so we'll talk about that as well. Two guests on the docket today. Ryan Dietrich at 8:35. He is a chief market strategist at LPL Financial. And then man himself, Peter Tuchman, the Einstein of Wall Street, will join us at 9 o'clock as he does every Thursday. Before I throw it to Joel, take a second out of your life, everyone, and do what it says on the screen. Smash that like button, please, and thank you. Also, if you haven't already, check out the link in the description to the Pre-Market Prep Saturday Extravaganza is what I'm calling it now. It's actually about a week away. It's not this Saturday. It's next Saturday, and the link is in there, description. Check it out. 3 hours, but let's be honest, 3 hours, probably more, of Joel, Dennis, and Rob on a Saturday. Link in description. Check it out. Joel, Dennis, good morning. How are we doing in the overnight session?
Quiet. I won't do my Elmer FUD here, but we're up 2 1/4 handles. We made that all-time closing high yesterday at 44,400.50. So there we are. That's minor support. Pre-market low. I mean, quiet range here. We're down at 35.75. Crude up and down, down today, down 38 cents at 68.87. Not really seeing any clear patterns in that. Gold down 330 at 1750, battling to get back. You talk about old resistance, or old support, new resistance. That's what you have in the gold market. Silver, that's down 16 cents at 23.32. Bitcoin, 50% retracement almost to the T. And we're down $1,600 at 44,830. And Ethereum, that's pulling back too a little bit. That's down $155 at 3109. Triple D, 8-9 point range last night. But I bet you found some stuff to get down and dirty in.
There's always stuff to get down and dirty in, Joel. It's just a matter of looking around and finding what's moving. And yeah, I got down and dirty in some Fisker last night for the long-term portfolio. So been looking at this stock. Obviously, we had obviously I've talked Fisker and I've liked Fisker for a long time. It had the ridiculous run up to $30 back in, when was that? If we go to the charts, back in March, I guess.
Yeah.
I didn't get out at 30, but I think I got out in the high 26, 27 area. And I've been looking to rebuy it. I rebought it once, and then, I've sold it. So a couple times in the swing trade account, but I wanted to put it back in the long-term portfolio. It was in the long-term portfolio. I took the big gainer back in March, and I wanted to get it back. So Morgan Stanley with the reminder 2 days ago is like, oh, don't forget about Fisker. Obviously, we had the big pop on the Morgan Stanley rating reiteration when they put the $40 price target on it with an upside possibility of 90. Everybody got excited. Stock went to 1948 2 days ago. I'm like, today is not the day, but today is the day to put it on the radar. I think today is the day to reload your Fisker in the long-term account. I don't know short-term. It could come back and fill the gap all the way down to 15.
Yeah, I was just going to ask you that.
It could come back, but if you're going to your long-term account, you may never get the perfect pricing. I just know when a stock is a big move, a lot of times, we knew Fisker was going to do some more, they need to raise some more capital. We knew that. They said that. Fisker said that. So, we know they're going to production next year. They need to raise more capital. Obviously, they see the pop in the stock as an opportunity to raise some additional capital. So they're raising for the right reasons. I don't like to buy companies that are raising capital because they're trying to stay in business. I like to buy companies that are raising capital because they're trying to grow. Fisker is trying to grow. Fisker is trying to get off the mat and get their production started. So they need more capital. So it's the right reason to raise capital. That's why on today's pullback, I pulled the trigger here. So I know it's down a little bit from last night. I bought it last night in the after hours. It's down a little bit more. Again, this is not a trade, so this isn't my long-term investment account. I just put my shares back in. Going to try to forget about them now, unless it pops to 30 next week.
Did you go like full, because I don't want you lamenting. Yeah, okay. So you don't even care if it comes back to 15.
No, because I'm with Morgan Stanley. I think eventually this could be a $40 stock. So it just got way overdone back in March, though. When your stock, even if you love the story and it doubles in a week, you got to take some off the table, because that's just too much too fast. If Fisker was $30 3 years from now, it'd be like maybe, we have a lot more information, but it's still a concept. This is still speculative capital. And just like Kramer says, he likes Fisker, but as a spec. And I agree. I wouldn't put 100% of my money in Fisker, but would I take 1% of my net worth and put it in a spec? Yes, it's basically what I did.
Okay, I'm still torn on this whole car thing. Like, who's going to emerge in Tesla and Ford in the EV thing?
So no, it is impossible.
That is,
and that's why they're all speculative.
There's 20...
Even Tesla, to a certain extent, is obviously now not speculative anymore, but for the longest time, I mean, we didn't, we were looking good. We rewind the clock 2 years ago. A lot of people are calling it, Mark Yusko was on the show calling it a zero. So, I mean, Mark's smart. So, it definitely is a different situation for Tesla now. I've just looked at the gap in the market caps, like I was doing this analysis, 2 days ago between a Fisker and a Tesla. And you think, okay, well, can Fisker get a piece of the pie? I think they can. We don't know who the players are going to be. It's a good point you're making, Joel. But you can start to see who has the better potential. When they've got the deal with Magna, they've got all set up for production. I mean, this isn't still Lordstown trying to figure it out, or Nikola rolling a car down a hill. This is, for real. These cars are going to be on the road. They are, there's already been some made. Obviously, we see Fisker, but you look at a $5 billion market cap, and you look at Tesla, which is way, Tesla's market cap still doesn't make any sense to me. But, a Tesla at $700 billion. And you think, wow, this is less than 1% of the market cap of Tesla. So this is a speculative play, but I think you're going to see Fiskers on the road. And I think the story is going to get hot. I don't know when, maybe it's next year, but usually the story, some people were saying, why don't you wait till next year when they start production? I think the story will be ahead of that. I think the stock will carry on the story ahead of the production. So I want to be back in.
You're in. You called it. You said, you said it on Monday. You said, and you said 16 to 17. I wrote it up as a pre-market prep stock of the day. You have plan. You're following the plan, right? So whatever.
I was waiting for a pullback. I
get it.
Convert offering. That's the best pullback you can get, because they're raising money for their production.
It's not dilutive. Yep.
It will be dilutive. All offerings are dilutive. If they obviously did a flat out equity offering, it feels more dilutive because some people may not convert. Maybe some people just want to get paid. But when you do the convert offering, it is dilutive. That's why the stock's down. But we knew that was coming. This isn't new information. The market's pricing this in like, oh shit. It's not an oh shit moment, in my opinion. I think this was expected, and I wouldn't be surprised if Fisker, and obviously, pricing and everything, we don't know. Maybe it pulls all the way back to 15, but I wouldn't be surprised if they shrug this off.
Can we talk about Palantir here?
Well, can we stay on the electric car thing? Get Ride and Neo out of the way.
We got Ride too. Maybe
Neo,
we should talk Lordstown.
We got Neo, we got Ride, we got Workhorse. Fine, we'll stay on this theme for a minute. Let's start with Neo here. Earnings last night always had a strange time because it's over in China. For whatever it's worth, their EPS beat, their sales beat. Deliveries, which we already knew for July, were good. For the quarter, they delivered just under 22,000 cars, up from 10,000 in the same quarter last year. Guided a little bit more deliveries in the current quarter. Q3 sales came in above estimates. What is the stock doing?
They had a quick dip. Buy the dippers came in 43. I'm not going to spend a lot. I just can't get this like 46 level out of my head. I know I see a couple other highs here, but man, you just got to draw a line across here and respect that as resistance. Resistance is until it's broken. Trading up 59 cents. It's just bumping up against it. So really bullish over 46. Let's see what you haven't hit that in the pre-market. Pre-market high is 45.
Okay, from NEO, we'll go back to the U.S. We'll go to let's go to ride. We don't talk ride much these days because I'm trying to get Marcus back on the show, but we'll talk ride this morning. They disclosed last night revenue of zero the last quarter.
All right, so not selling anything.
Shocking.
It's still concept.
Right. Revenue
Similar to Fisker, still in conceptual stage.
Yeah. They're having strategic conversations. They have, we'll call it about $250 million in cash on their balance sheet, which doesn't seem like a lot for a car company. And they need to raise more money is basically the bottom line here.
Or they need a partner.
Also, they said that their endurance production will be limited to coincide with the commercialization roadmap. So yeah, nothing really good here.
Yeah, nothing.
I don't know.
I mean, it's trading up 36 cents. $6. It seems like it's someone just like whack-a-mole. Like whenever it gets over 6, someone comes in and whacks it. But you get over, you hold 6. Maybe you got some room on the upside. Yesterday's low, all-time low. If you take that out, it's probably time to go. What was the low from yesterday? Low from yesterday came in at what? Right, it kind of closed near the low too. 543, 558 close. That's what I'm looking at in RIDE.
And then Workhorse, they're still having in the midst of that litigation with the U.S. Postal Service regarding that contract. But in the meantime, we get another contract with the U.S. Department of Agriculture for their Natural Resources Conservation Service. Their Workhorse is going to deliver to the USDA unmanned aerial drones.
Well, that's interesting. Getting a little pop off that at 34 cents, trading at the highs of the pre-market session, which is 10.10. I mean, if you can find, let's see, what's these pair of highs here? Maybe, if they like this today, I mean, easy target on the upside if they can keep it bid 10.27, and then 1, 2, 3, 4, 5 highs at 10.50 on a pullback. So I'm sure some people would like to see the low close in the move yesterday at 9.80.
Okay, now can we go to Palantir?
Yes, Spencer.
The one I want to talk about.
The stock that nobody knows what they do.
You're probably right. And even if we think they do, even if we think we know, I don't know if we actually know. I don't know. Anyway, EPS this morning beat by a penny, 4 cents versus 3 cents. Sales of $376 versus $353 million. Q3 sales guidance above estimates. They raised their free cash flow guidance for the year. As Christian noted, the call is going on right now, so I don't know what they're saying, but the numbers were all good for Palantir, and the stock is up $1.50 this morning.
It's such a strong retail name
Yeah.
that you run into problems, and you have weekly options even on this. So you run into problems where there's so much optionality that is going to hold the price probably from just exploding. You've got a nice explosion in the pre-market, but I think you're going to have a real struggle to get through 25. 1, it's a big psychological number. 2, on the weekly calls, there was 30,000 open interest contracts at 25.
Really?
That's equivalent to 3 million shares. So, I mean, those 3 million shares gets above 25, all of a sudden getting the money. So it makes it tough. And then if you even go out to the monthly calls at 25, there's another 79,000 monthly calls. That's equivalent to another 8 million shares. So they have 11 million shares worth of liquidity just at 25. I'm not looking at 24 and 23. There's so many options, open interest on this, that it makes you think it's going to struggle to really get going, because as those options go up, market makers naturally, you look at 25, you're in the money. People are naturally trying to sell to take the money. So it's tough. And then there's just so much overhead supply. The story, I don't even know the story. I don't really, like you were joking. I'm not even sure anybody knows what this company does. They joke about it on CNBC all the time there too. It's tough when stocks have, had this much memory in an area. I mean, we've been between $30 and $20 for the better part of the entire 2021, from February, really. There's so much congestion in here. There's so much overhead supply. There's so much open interest. It makes me think it's going to be very difficult for this to get over 25. So I would absolutely not buy it at 24.5 here this morning. Just my opinion. I think it's going to struggle to get through 25. So I think you've got a potential maybe 50 cents of upside, but it wouldn't surprise me if sellers start to come in too, especially after the open. Think about 9:30. Those options aren't even open. People start selling those options like, oh, I'm making some money, and then that puts natural pressure on the stock as well. So I don't know. I would not chase this move here this morning. PLTR.
Because I got an email, and they were talking about the optionality and exactly what we're talking about now. And so just maybe we'll both just explain it in a little bit more detail. Then I'll give the technicals. It's just that you're just talking about the 25s, right? But this thing closed $2 lower. So people that took a flyer on the 23s, I don't know what the premium was. The people that took a flyer on the 24s, I don't know what the premium is. You could sell that option right now at a price, and on Friday the stock could actually be higher. But because they take the juice out of it, because they're going to wring the juice out of it now after the report. Yeah. So that's what Daz is talking about. I agree with him. We're on the same side on the technicals on this one. We got a gap fill coming up at 24.47. We've already fulfilled that. So if, in fact, you can take out the pre-market high, if, in fact, you can clear out the paper at 25, there's a pair of highs, and I'm just going to give you the middle, 25, 27. So that's the longer it takes, to get up there, then I'm looking for the triple D rollover and possible rollover. Top of yesterday's range, 23.19, if you get like one big seller coming in. But right now, doesn't feel. It just had a spike down there. I don't know if that was a print from yesterday, but that's the top of yesterday's range.
Remember the straddle too. Straddle's often priced at we get our buddy there.
Who's our buddy?
Oh, come on! Why can't I think of his name? Anyways, okay.
Give us a hint.
No, the guy's on 2 weeks ago. The awesome options.
Oh, CC Legator.
CC.
Yeah, just gotta give us a hint, man.
I had to think about it, but he's always he's looking at those straddles. He does such a nice job with the chart. CC. I'm sorry, CC. I can't believe I couldn't think of CC, but it's like Sabathia. I was thinking of Sabathia.
I know. Listen up. You're turning into me. Go ahead.
I'm getting old, man. I forget names, but you know what? CC. As soon as I see him, I know I'm CC. But anyways, $2. I mean, you look. The straddle was $2. It's up $2. I mean, these market makers are good, man. It will struggle for all of those reasons above. And you know what he was saying? When he's looking is you've got to have, look at where, these options are priced. And you look at, that, he had that beautiful chart he was showing us too, breaking it all down. It's it's going to be tough for it to get out of this range. And I mean, that's the same thing at 24.5, when you price on all those options, you're going to have trouble breaking out of those range. Do you think the 24, what the 24 calls were going for? 40 cents. Okay. So those are a scratch. The 24.5s, which aren't even the money, they're 30 cents. The 23.5s, okay, they're making some money on those. You're making about 30 cents for your 60-cent risk. But this is why it's so hard to make money buying options. You get the direction right. You get the move you need, a 9% move. And you bought the 24 calls and you're still not making money. That's tough. And then obviously if you did the 24 puts, you're definitely losing money. So it's tough. It's tough to make money buying options. The real money is made selling options. We know we've had Nick Shaheen on here for years telling you the same thing. He makes his money selling options.
It's even tougher.
Everybody wants to buy lottery tickets. There's not a lot of people that win the lottery. Now, I'm not just saying sell options, win money, because you have to know your risk, and sometimes you have to pay out when the lottery hits. Sometimes you do have to pay out. But there's a lot more money made selling options than there is buying options. These guys are good, guys and girls. Market makers are good.
Also the weeklies too, like the weekly on earnings. I mean, they just juice them, ahead. And then right now they'll just suck all that premium out right away after the report is known. But excellent points there. We'll see what happens. I mean, it could just be, a major runner, but take out pre-market high. I don't know what paper there is at 25, and then we'll see what happens at 25, 27.
Okay, there's a couple people in the chat asking about Sonos, so I want to go to that one.
Sure.
They also reported last night. Very surprised beat, unless there is a big adjustment here, but their EPS of 27 cents compared to an estimate of a 17-cent loss. So again, either a big adjustment or that's a very, very big beat on their earnings per share. Sales also came in higher as well. That's it.
Love this stock. I'm upset with myself that I'm not in it. I was in it. We had a nice trade in this. We had Andrew left on the show. What's it got to be? A year and a half ago, maybe over a year ago. I'm looking where the price was, probably a year ago. And the stock was around 15, 16. He says, somebody's going to buy this. When he said that on our show, I went out the next day and I was like, you know what? I'm putting some of the Sonos in my long-term portfolio. And it was a great one. I think I bought it around 16 or 17. I sold it around 33 or 34. So it was a really good, like almost a double, 100% winner. Had the big move, so I rang the register. But now I'm looking, I was like, I kind of want my shares back again. Sometimes you just got to hold a little piece, I think, and obviously you have to pay the tax on it too when you sell it as well. But here's a big move again, and I'm not participating in it. So it was nice to make the double. It was a good trade. But I still like this company. We've got Grasso on CNBC last night saying he thinks this could be a $60 or an $80 stock. He might be right. He's talking his book, obviously, but he might be right. I think, again, I feel like the Fisker situation. You get the big pop-up. If you forgot about it, maybe you wait for the pullback now as opposed to buying stocks up 10%, because we're in this market environment where you're punished if you're chasing, and you seem to always get another chance if you're not chasing. I mean, the person that bought Fisker at $19 on the Morgan Stanley upgrade is having buyer's remorse, definitely, when they look at it this morning at $17.10. So it seems like, that you get the pop and then they give you a little another chance. It's the market that gives more chances. We're not in this like breakout trending, everything is running market you got to chase. We've been kind of just in a consolidating even on individual stocks. Buying dips, selling rips has been a lot better than buying the rips and then hoping it's going to rip higher. So I'm not chasing the move, but I love the company.
Can't give you a ton on the technicals here because it's kind of in no man's land. So I'll just give you the pre-market high of 39.39, bumped his head up there. It is a buck off that. So let's get through there. Let's take it out. And then I just got to go to your monthlies here. You haven't been at 40 in a long time, but your May high was 40.64. But first things first, let's get through that pre-market high of, what did I say, 39.30 something? 39.39. Easy number to remember.
Okay, we got a lot of earnings. Let's take a break from that, and we will get back to the earnings. I want to talk about vaccine stocks for a second. Moderna, Pfizer, et cetera, et cetera. There are headlines. There's a headline yesterday about side effects in Moderna. There's a headline this morning that the CDC is going to advise on booster shots. Or I'm sorry, the FDA. The FDA is going to authorize Moderna and Pfizer booster shots for some people. I personally, and I said this to Joel yesterday, I don't know if any one headline is responsible for any of these moves, especially in Moderna, the last couple of days down $100.
Oh, there's one headline that was responsible for that, and it was the EU looking into new possible side effects for mRNA shots. So there was definitely one headline that this thing got hammered on. It started with a Bank of America bearish rating, and then and I think it was, I don't know if it's a downgrade, but it was a sell rating with a 100 price target. And then the second day of the bad news, you already had people caught who were buying the dip. And then you came out with the EU looking into new possible side effects, and they hammered the stock. They absolutely hammered Moderna. I mean, we're down 100. We're popping a little bit this morning, but we're down $100 in 2 days. So it's a 20%. Just all of a sudden, if you'd say technically when the stock comes 20% off its highs, it's in a bear market. It's not in a bear market. That's why the technical definition of a bear market is dumb. But this shows you how extreme this sell-off was. I like Moderna. I don't think the side effects, are going to. I think it depends on. We don't know. Like, I mean, if they start to have serious side effects with all the mRNA shots, that's a serious issue. But it seems like we always get a headline where, okay, there's something. There was side effects. They were looking, obviously, the Johnson & Johnson before. I mean, there is definitely side effects with these shots. There's no doubt that there is some side effects. It's like when I was getting my COVID shot, and I know you, Joel, maybe the same thing. I'm analyzing risk reward. I'm like, your risk is that there's unknown side effects. Your reward is that you're better protected against the COVID virus. Well, the COVID virus is pretty bad too. So that's why I went with getting the shot. You can sit here and worry all about, the side effects and stuff, but the bottom line is Moderna is the reason that, Moderna and Pfizer are a main reason why, we're starting to get something looking back to normal. Without vaccines, I mean, there's going to be, it's a lot tougher to get back to normal for sure.
I have to take umbrage with what you said at the very beginning, Dennis. I don't know if you can really say definitively that any one headline is responsible for, maybe like as the Kickstarter, sure, but there's nothing like a change in price to change sentiment. But like, I was FOMOing hard here on Moderna for the past couple of weeks, and I'm glad I didn't do anything about that. But is Moderna a great company? Yeah, because you convinced me that it's worth its market cap and that it should double in a year. Yeah, should it double in 3 weeks? In 2 weeks? Probably not. Right? That's kind of scary.
I'm not sure if I even think it should be worth a market cap with but you can see that the valuation isn't crazy if we continue to if we have to get and we all get the vaccine booster every year. You can see that this valuation makes sense. If we get to a point where we don't need boosters anymore, all of a sudden this revenue stream stops in 2 years, then this valuation makes no sense at all. So it's kind of a play with Moderna on whether you believe we're all going to get an annual booster or not. And this annual booster is going to go on for a lot of years. That's kind of the play with Moderna. And that you're not going to have side effects, or you're not going to have a better drug come out from a different company, which could be the case as well. There's a lot of companies still working. Maybe the Novavax drug is going to work better when it gets approved. Maybe everybody on their next shot is going to be getting Novavax in a year. So those are the risks. I didn't say this before, obviously, so it's easier to say it in hindsight, but like, it made no sense. It probably made no sense that Moderna did what it did.
It also got added to the S&P.
It got overdone.
Yeah.
It got overdone. It was probably due for a correction, I think is what you're trying to say.
Yes.
It was definitely the headline that killed it. Everybody, it was everywhere.
Well,
I had it popping up on my phone. The Moderna, the EU stuff. So this wasn't a little headline. This was a major headline.
Okay.
So and you look at Pfizer, same thing. There was a reason Pfizer and BioNTech. It wasn't just Moderna. BioNTech, same thing yesterday. Pfizer, same thing yesterday. All falling and selling off on the breaking of that headline. So the headline made a Kickstarter, but you had a crowded trade. I think the point you're trying to make it was a very crowded trade and maybe wanted an excuse to sell off, and this gave it a really good excuse.
Yeah. This is a tough one. I had a pretty good feel for the stock when it was, trading up there at the upper boundaries near 500, just because the daily lows were so far apart. But when you look at this chart, it was obviously priced for perfection. If I was trying to buy the dip in this one, I mean, yesterday's low did coincide with another low. It's just like, do we have a date with like 345, 350 on this one? It was the all-time high for a little bit, and then there was a few lows in that area, and then there was consolidation, and then it broke out from there. So I don't know what the path is. I know the path back up 400, wherever, 410, 420. There's going to be orders sprayed out there, people trying to exit, so it's going to be tough to pick a rebound. But on the downside, I don't know. 350 would be the area I'd be looking at. Like if I had a short or I was looking to try a swing long, I think I'd have to wait for that area.
I still love the company. It's the market cap that I still can't totally wrap my head around. But if you think you're going to get a booster every year, you can start to get your head around it that way. So it's a matter. I think it's a call. If you're buying Moderna, I think it's a call on whether you're going to get a Moderna booster shot every year. And you're going to say that the competition isn't going to come for them, but there's going to be a lot of other COVID drugs too. So it's
but to Joel,
it's a tough call.
Maybe if you want to buy it, maybe you wait here. Maybe you just. I mean,
I think you don't buy on day one.
We're down $100 in 2 days, right? I mean,
it's going to bounce. It's going to have a bounce in here somewhere. I don't know if that bounce is coming from 350, like the level Joel's talking about. If we have an opening flush and we bounce, but after a couple massive days of selling, it just went from overbought to oversold. So it's probably going to be due for a bounce. It's getting a little bounce here this morning. But, to know the path of this stock 3 weeks out, nobody knows. Nobody knows. You had the one guy on CNBC saying this thing could have $1 trillion market cap. And then you had literally somebody else in the next segment on CNBC saying, the Bank of America analyst saying this is $100 and, it's just way overdone on basically just the COVID shot. So, but they have a lot of other stuff cooking. Like we've said, this company, they're working on the flus and the vaccines, and they're working on a lot of other things. So they're smart. I love this company. I just don't know if I love the stock. I can't decide.
Yeah, that's a tough chart. two things here. Producer price index comes in a little bit higher than expected, 1% versus 0.6%. That brought us back down to unchanged in the market. No big movement here. Real quick, we got a nice little tip on AstraZeneca. I own AstraZeneca. I don't know where. Lisa was just doing some research on it. She likes some of the prospects they have in the pipeline. I don't know. It's been such a range, but this is when they got the big boost off their supposed vaccine. But 60 seems to be the top of the trading range, and 56 looks like short-term support right now for AstraZeneca. Not a real exciting stock to talk about.
Let's talk about Open Door real fast. Let's go back.
Sure.
Back to the earnings here. Are SPACs back? Question mark, question mark, question mark. Open Door, EPS came in higher. Sales came in higher. They gave Q3 sales guidance higher as well. Here's how many homes they sold last quarter. They sold a little under 3,500 homes in the quarter, up 41% from the prior quarter. They bought a little under 8,500 homes. So they bought 8,500. They sold 3,500 homes in the second quarter. That was also a massive increase from the prior quarter. The more I think about it, the more I read, the more I'm thinking that like all these platforms are just contributing to the absolute chaos and madness in the housing market, and I don't know if I like it. But regardless,
I like that summation.
Zillow and Open Door probably here to stay. Probably not going to slow down their home buying anytime soon, and there are a dozen such platforms as well. So it is what it is. But Open Door is trading higher, or at least it was last I checked. Yes, it still is.
It did, and you got some nice confluence there, right there. $18. The after hours traders jammed it right there. They went bid, hit 18, 3-4 highs in that area, backed off 85 cents. So we got some work to do. Get back to 18. Don't know if you'll see the top of yesterday. That's way down at 15.11 if you're looking for a gap fill. But they've already lowered their offers from 18. So we'll see. We'll see how close it can get to that. But the dailies are confirming that as well.
The straddle on this was actually about, they had the straddle priced up to about $2.20.
Hey.
So you look here, 260, a little bit over the straddle right now. I never like buying them over the straddle price. And then the options, the 15s were $1.90. So you're making some money on it. The straddle, obviously, it's above the straddle, not a ton. And you start to run into trouble after you get to 17.5 because you have a whole pile of open interest. That's why Kenny's talks about the 15 will get you 17.5, the 17.5 get you 20. There's a reason these are stopping points when you get to the 17.5. It's because everybody is, again, we just had this conversation with the last stock we were talking about, but you got to look at those open interests. 14,000 shares of open interest is $17.50 just on the calls. So you think, okay, well, that's equivalent to, 1.4 million shares. Things trade 1.2 in the open. It can easily do that. It can shoot through that. But there's, the potential for sellers up there above 17.50. So I would think the natural next stopping point, I don't know what it's done pre-market. Going back to open. I know you're showing Palantir, but we're talking open.
I know. I'm sorry.
No, I was just looking at the chart trying to see, it was up over that, and it's come back down now.
Yeah.
Got up over 18, which got over down, and then started to struggle at 7. It was starting to get locked in for a few hours, 17.5, and now you're below 17.5. That's telling me the options are having an impact there. So even though I'm not an options trader, I actively, if I'm trading an earnings stock, I actively look at the open interest because it'll give me a target. It'll give me, a price where I think you're going to thicken up. You can see there's probably going to be natural sellers coming in around 17.50, which tells me, do I want to buy at 17.14 for 30 cents of upside when I have the potential for a rug pull, which we've seen before? And a lot of times stock up 18% doesn't close up 18% in this market. So again, I'd be more of a seller than a buyer on OPEN, but I love selling reps.
Yeah. Also, just going back to this whole optionality, and we couldn't have had better timing when we had CC on, and that day that it blasted to 85. Oh, I lost my 50% retracement on this one. Which is, it's actually $59, which it struggled at. That day it went to 85. I think the highest option listed was 70. And now you're back down here. I'm probably going to get a gap fill. Boy, this thing has lost its luster. Top of the gap is 48.59 for Robinhood.
All right, let's bring on our first guest today, Ryan Dietrich, the Chief Market Strategist at LPL Financial. He has agreed to join us this morning from his arcade. Ryan, good morning. Welcome to the show.
Nice.
What game is that?
Good morning, guys. It's NBA Jam. About a year ago and everything. Well, maybe, I don't know. Whenever COVID started, April or so last year, we're stuck at home. I ordered this game, and actually over there, I've got Golden Tee. So I'm always working one way or another, maybe working with the stock market or working on my jump shot inside, one or the other.
What year Golden Tee do you have?
Oh, it's all of them. I guess.
Oh, you have all of them.
It's one of those. It's like 5 different Golden Tees all in one arcade.
When that came out, that Golden Tee, I can remember I was probably about maybe 23 or 24 years old, and back in your just after university days, we would play that Golden Tee. Something fierce. What year is the NBA Jam?
Yeah, that's what I want.
Also, I'm looking right here.
Wow, you guys are
Hang Time, the original one, and then it says Tournament Edition. So there's 3 different ones in
Man,
there.
I used to
awesome.
I used to play as the Knicks, man, all the time. Oh my gosh, I love that game.
What are you guys talking about?
We're talking about games from the 90s.
Joel plays pinball and he tilts the machine. Joel these are past Joel's. Yeah.
Right.
Joel really dates himself because he wasn't playing any Golden Tee, or I wasn't in the NBA Jam, but
no. I was having a kid, man. I was parroting.
It's fun to have grown up with these and play with my boys. It's a neat experience.
Oh,
let's
for
talk,
sure.
Maybe talk Big Ten football or stock market, whatever you guys.
All right, pick one. Joel, what were you going to say?
Joel, Big Ten.
We could talk Big Ten in a second. Ryan, you got to be running out of stats. You got to be running out of stats over here. I'm running out of levels on the S&Ps, and I have to go to the oldest trick in the book. But stat me, man. You have the stats on this market, and let me know what we're looking at.
I'm going to share. I think I'm sharing my screen here. You guys tell me. Are you seeing that screen? I hope.
I got you.
Awesome. So it worked. That's good. I use Zoom a lot. When I use these new ones, this is a new one for me, but this is good. It's working. So there's always a stat to talk about. It's been fun. I'm calling with you guys a lot, saying, listen, this is a major structural bull market, likely going higher. Most of the stats that I share on Twitter or share with you guys say something similar, right? I mean, there's a lot of strength. We're probably going higher. That hasn't really changed. But here's one that's really cool, I think. Who knows? Today could be the day. The S&P is up like 99% from those lows. That's price, okay? Total return, yes, we're officially at a double. But on a price return, you can see it here, guys. That'd be the fastest ever. Usually it takes like 3 or 4 years for stocks to double off of a low. And we all know this. We've talked about it. But just when you put it in a picture versus all the other previous bull markets, the previous fastest, you can see that green one there, just over 2 years. That was the 2009, 2010 bull market. So, we've gone a long way in a hurry. I mean, that's pretty obvious. But, let's say we get some regular seasonality. We'll go to the seasonality first. You've all seen this. I'm sure other guests have talked about it. It is what it is. August and September historically are pretty weak. August during a post-election year is actually one of the weakest months of the year. Remember last year, September, we had almost a 10% correction. I don't know if any of us even remember why, right? I mean, just the market was up a lot, maybe some pre-election jitters, but it happens, right? So just be aware of that. And then we have a new party in power in the White House. And historically, you can see on this slide, that's when the market peaks. I think it's August 6th. So we just, historically got in this very, very weak time frame. So just be aware, after one of the fastest doubles we've ever seen, now all of a sudden here we are, and we've got, the seasonality potential weakness. Let's say we haven't had a 10% correction since the crash, 5% correction since October. We know those things. Historically, you get 2 to 3, 5%ers a year, 1% a year. So we're stretched. And let's say we get a 5 to 8% correction. What are we going to do with it? Well, check this out. 6-month win streak, right? S&P's up 6 months in a row. One of the longest streaks we've ever seen, tying September of 2018, as you can see there. Remember the 10-month win streak after the election in 16? That was crazy. But anyway, what happens next? Well, guys, you see it here. 6 months to a year later, you get actually stronger performance. 1 year later, S&P is up 18 out of 21 times, and the average is just about 12%. So these are just different ways, all different. What did Mark Twain say? History doesn't repeat itself, but it often rhymes. Yeah, we could be at a pullback or something like that, but the strength that we've seen is just truly amazing. And I'll tell you, we like value. Now that's obviously been a difficult trade the last couple months, but we're still in the camp with our board 19,000 advisors, and the tens of billions of dollars that we manage for them. The truth is we've got to tilt toward value. And I look at financials here, that 4-month consolidation just now breaking out, the 10-year yield and that little double bottom recently. And now the 10-year yield looks like it might want to start going higher. We can talk about inflation and all the spending. And, the market's going to do what it wants to do. What are the charts telling us? Are we listening? I mean, financials breaking out here to us suggest that baton has been passed back. And I got some more. If you guys want to jump in and do some questions, or I can keep going. How you want to do this here?
We like the stats. I like this presentation here.
All right, well, I'll just keep rolling this. So we had a birthday, as we know, year 2 of the bull market. I'm sure people have talked about this before, but historically, year 2 of a bull market can be a little choppy. Now, remember, year 2 started on March 23rd, of this year, because March 23rd of the previous year was the lows. And year 2, it can be choppy. 16% correction in 2010, 2004, one of the most sideways markets you're ever going to see. 2083, similar kind of tight market. But here's the other catch, all right? Stocks have never been lower in year 2 of a bull market. I've got all of them, at least since 1950. Got them all of them here since 1950. The average return, 12.7% there. You can see average drawdown close to double digits. I mean, the truth, again, this is early in an economic cycle, right? I mean, we just ended the recession. The government told us we just ended the recession. Like, we all knew that. So this is about a year, a 15, 16-month-old expansion. Historically, your average expansion is about 5 years, right? So what happens normally when the economy is growing, when earnings are going higher? Stocks tend to go higher. So we think we've got a major tailwind here that could last a couple of years. Yeah, there's fiscal stimulus, monetary stimulus. We're not ignoring those things. But earnings do drive long-term stock gains, in our opinion, with LPL research. They keep coming in way higher than expected. We might see 90%. I think I've got an earnings chart here. Let me just take a look here. Cool.
The earnings results have been good. The reaction,
I'd like to go there too. What about the big tech? I mean, Apple. Had that amazing run. I'm looking at Apple's going on its 11th day of trading between 144 and 148. We know there's a pile of paper there. Seems like Microsoft hit a brick wall. Amazon's not being treated well off its report. Google's Google. I looked it up last night. We've said it before. They paid $1.6 billion for YouTube in 2006, and last year they made $21 billion off it. What a great investment! But anyways, what do you think about the price action and some of this big tech coming off earnings?
Yeah, I think it's kind of a play on, really strong, sell the news, or maybe simply time for value, like we talked about. Those are the drivers. Now, we're neutral on tech. We don't like technology. We just still think, your materials, industrials, financials. And now that they're taking that baton back, it looks like it could just be kind of time for a break. I mentioned the seasonality factor that's in there. So we're not overly concerned with tech. And did you guys see the triple leverage FANG ETF that came out the other day? Like you talk about
what's the symbol on that?
I don't remember. I saw it on Bloomberg. I don't remember, but it just came out. You talk about contrarian indicators. Oh, let's do a triple inverse on some groups that honestly, like you said, have been struggling a little bit lately. That the contrarian in me starts to wonder a little bit, and we're throwing everything else out now. Now financials are breaking out, so that's kind of interesting. One other thing for me,
that's not new.
Well, FNGU's been out there. I thought there was another one. I trade FNGU, but maybe he's talking about another one that's come out.
Yeah, there's a new one. I know the guys from Strategist pointed it out, saying a new one. And I have to, I'll look it up and let you know. But I know there's one more triple inverse, or not inverse, wrong word, triple leverage one coming out on the FANG stocks pretty soon, according to the Strategist guys. But the other thing that we keep hearing about, and it's coming out there, right? Taxes, how are we going to finance all the spending? We get it all. This could be one of the first years since the 50s. The cap gains and corporate taxes went higher in the same year. Think about that. But again, shouldn't be a shock to people. And as we share here, previous times we had increase in capital gains taxes. Did it matter to the stock market? I don't think so. 86 in 2013. You guys see it there. 6 months later to a year later, stocks did well versus the 70s when stocks didn't do as well. Could it be as simple as the 70s with high inflation, not the best time for growth? Maybe it just wasn't a good cycle versus 87 early in a cycle of growth, and then 13 early in a cycle of growth with an accommodative Fed. Does that sound familiar? So these are some things that we talk about with our advisors and their clients every day. Higher taxes, what's it all mean? We're extended. We likely could have a little correction. We're going to go into value on that, the cyclical value, I should say, on that pullback. And, the stats I keep seeing do suggest this bull market's alive and well.
So I was looking this morning. I saw this chart. We've made 46 new all-time highs this year in the S&P 500. The record 77 and hit in 95. I don't think we'll get quite there. But the record in recent memory was 62 new all-time highs from 2017. And again, this is the SPX. We're at 46 now. You think we can get there?
Yeah, so it's interesting. That was the last chart, so I'm sharing it there. And no, I don't think we're going to get to 77. But if you extrapolate it out, we're going to be really close. And we're not so sure. But I think the key concept this early in the year to have, like, 45, 46 new highs, you've got 1964 and 1995. That's it. All right. Like you said, what happened the rest of 95? I mean, 45-degree angle straight up. Now, the rest of 64 stocks were higher. They weren't bearish by any means. So it's a really small sample size. So our statistics teachers would be mad if we talk about a sample size of 2. I'm still not going to ignore it. I mean, I still think that there's the market's telling us something, that when you start this strong, you tend to resolve higher, like a lot of the stuff I've been sharing. And this is the other thing on this chart right now. And what do we know by looking at this? Just look at it. New highs, guys, happen in clusters that last like a decade or more. Now, I've been talking about this for a long time. People hate it when I started pointing it out in 13, 14, 15, because, oh, no, it can't be true. It can't be true. For some reason, people are just naturally bearish, but it's happening, right? And again, the history would say we could see several more years of more new highs and continued new highs. I mean, every year is going to be higher. 2013 stocks were flat. 15 stocks were flat. 18 stocks were down. Yet stocks gained 400, I think it was 399 or 401% during that 10-year bull market. So it's going to be, it's not all straight up. We don't want it to be. But the concept of this chart is so powerful for your longer-term investors that, new highs are still coming, in our opinion.
Who's going to be the quarterback at Ohio State?
Yes, I think CJ. We're changing gears now, aren't we? Yeah, CJ Stroud. I think he's
CJ Stroud.
Yeah, he's the guy who's been there, and but I mean
we'll probably lose, but by not as much to you guys. How's that for a prediction?
We'll see. Can't disagree. That one guy, Uber, is the number one player from the class 2 years from now, who reclassified to come early to make his $1 million because of the whole.
Yeah, isn't that nice? He drops out of high school.
Yeah. He's technically a junior right now, and he's I guess going to be a senior, but he's showing.
Show me the money is what he's doing. I don't blame him.
What are you going to do? That's tough. If you're a number one player in the class, you maybe go early, make that money. I don't think that's unintended consequences. I don't know if the NCAA thought of that.
I don't think they thought of a lot of things.
Mm-hmm. Well, good point there.
True. All right, Ryan. So just to wrap up here, we know you like the banks. Is there any one sector, or if you want to get more specific, any one industry that you like in the short term here?
Mm-hmm. Yeah, I mean, materials, industrials. I mean, those two. I mean, you look at copper, you look at some of the industrial metals, and I think materials are up like 7 or 8 days in a row. So it's pretty good win streak. But those are some groups that we still think. We look at precious metals versus industrial metals. Some of those trends. The economy still strong in our opinion. I know COVID and the Delta variant are there, but we just think that the market and the market's telling us something. So we're sticking with those. We've liked those groups, and we're sticking with those groups.
Okay, Ryan Dietrich, maintaining his bullish stance. He is the chief market strategist at LPL Financial. Joining us here on PreMarket Prep. Ryan, always a pleasure, man. Thanks a lot.
I'm going to play some video games. We'll see you guys. Thanks.
All right. Have fun.
So jealous.
Bye-bye.
Yeah.
We're leaking here.
Such a good game.
NBA Jam, man. Oh, man. I wasted so many quarters on that game. Anyway.
Such a good game.
We're leaking, Joel. Is that what you said?
Yeah, we're right by $1.50. Woohoo! I guess I didn't like the PPI number.
This
Nothing major.
volatility is killing me.
Yeah,
There's
I know.
Movement in the overall market. I mean, yeah, individual stocks has been good, but overall market, quiet. So quiet, Joel.
It's everyone's on vacation. Europe, there's no one working in Europe, and people are getting the road trips in. Before
very quiet.
We're in the doldrums, guys. This is August.
We are.
Hey,
can't wait.
Next
month. August is always historically one of my worst months. If I look back, I should do that actually and just look, the seasonality of my own P&L. But with volatility comes down, I make less money. Volatility goes up, I make less money or more money. It's like clockwork. And August is always a slow month. September picks up, and then September and October are always awesome. But it's always quiet in August.
Do you want to get to the Chamath or Chamath popular stocks?
That was good, very good, Joe. We got to one. We got to Open Door. Let's look at Clover here. But just as a reminder, before we get to Clover, do you know what Monday is? For those of you who care, maybe I know Dennis might, but
Monday.
The rest of you might not care. This Monday is 45 days from the end of the quarter. You know what that means? It means 13F season. So maybe today, maybe tomorrow, maybe Monday, maybe over the weekend, you get some 13Fs come out who, what the largest hedge funds bought and sold last quarter.
Yep.
So that's something to have in the back of your mind. But let's go to Clover here. We talked open door trading higher. Clover trading higher as well. Sales above estimates, sales guidance above estimates. Here's an interesting note that I saw. This is a very interesting metric they have for Clover Health. I've never seen this one before. One of the metrics that they track is lives under management. That is a metric for them. Lives under management. I guess it just means users or clients. I'm not quite sure. But lives under management.
Someone's just bid, man. They want to get this thing up there. Look at that. I mean, on the 15-minute chart, they just bid. I don't know where they think they're taking this thing to. I would say, there's a gap in here. We're a small gap for this one. What's this high? Wow, that high is way up at 1116. So you got a gap in here to fill up to 1116. I don't know if they're going to be able to jam it to that area, but 1047, that's the only number I can give you, July 7th high. And until that buyer flips the switch and starts selling, just jamming it higher. Any comments from you, Dennis?
$10 is huge. Psychological from options perspective. We got 20,000 on the weeklies there.
Okay.
So that's going to be the big number. What a move this was back in June on the other, the short squeeze part 2 stocks. And obviously, I actually took a chunk of that move, not nearly enough. I was so mad at myself because you could see it coming. It all started with Bed Bath & Beyond back in June. And then I was like, okay. And I went out and I bought like 20 of those those stocks with high short interest. And they all started popping so fast. I think on Clover, I made like 20% in literally like 2 hours. And I was like, I'm taking my money. It was on that first candle on the June the 7th. I think I had bought it at like maybe like 960 and it went up to like 12. And I think I actually was selling it after hours, like 12.50 or 13. I was like, I just made 30% of my money in literally like 3 or 4 hours. And the next day, it had the big gap to $25. And I was like, holy, you think you're a hero making 30% on your money, and then somebody, and the thing doubles the next day. You're like, wow, I need to hold on longer. So I did not foresee that big of a short squeeze. It was the same thing with Workhorse. All those stocks, we looked the same day. That was, the squeeze of all squeezes for all these stocks. And I don't think you're going to see that again. So, but, you never say never. Stuff happens. But $10 is huge on this.
All right, let's go to the chat here. There was a question in the chat about Micron, and I'm sorry. I wish I could find who's. They're catching a downgrade this morning from Morgan, but I'm trying to. Whoever is mentioning.
Didn't they just upgrade it though? That's what the chat's saying.
That's what I'm trying to find. I'm trying to find and upgrade it, and I'm not saying there isn't. I don't know how recently they upgraded the stock. They're downgrading it here this morning. They're calling.
I'm trying to find it too.
Winner, but I don't remember Morgan upgrade to my.
I don't remember it either. Some people in the chat are saying they just raised it. Maybe it was like a reiteration because I don't remember.
Oh, it could have been just a reiteration. You know what? That's possible. That's possible.
Why would they do it so close? I don't know.
Well, I don't know if that's, I'm just trying to look through here too. I'm going through the Pro right now.
Toronto Dave says,
I guess you search Pro and then you can search it.
Yeah, Toronto Dave says a month ago they reiterated their rating. Okay, that's possible.
72.51. You took all those days to get back over 82, and then in 1, 2, 3, 4 days, you're right back at the low of the move. Oh, that was last month's low too. That's the only number I can give you on this one, 72.51.
There's so many analysts, and I can't keep them.
What do you think, though, overall? You just look here, and the chips are starting to show some weakness here. I mean, this Micron has had an impressive move, and we know this is a cyclical business. But the move from 50 to 90 was really impressive. I mean, I guess you get back to 70, Joel. You're getting close to that now. I guess you start thinking about like a 50% retracement of the move. But I mean, you look at Applied Materials, and you look at Western Digital, and you look at Seagate, which got an upgrade from GS today. Full disclosure, you have a trading position in that. I mean, you look at all these moves, and you just think, wow, these were huge moves. And, is there, Micron seems to be the first one that's seriously correcting. Is there a concern like in an applied materials that you could get like, a follow through move? Because applied materials make a new high 4 days ago. And now it's sold off pretty well. I'm very torn here. Very torn.
You know what these turned on a little bit too? We talked about it was the jobs number, right? And the whiff of higher rates, right, for these tech companies and how they're earning. So they've kind of turned off that, whether it's just to buy the dip, but they've been, AMAT, topped out. This is Thursday. That was, at the end of last week. Tied it. They're not necessarily going down, but if considering some of the reports that they have, they're certainly not like Apple's just not busting out. I don't know. It's a pause in the action and a bull trend. So I guess you still have to treat it that way, buying the dips.
Okay, we got to talk about Dillard's here this morning. It's being talked about by a couple people in the chat. They had earnings, but this is also just a crazy one.
This is a crazy stock.
Because it's got a high short interest. Here, let me just look real fast before I get the numbers. There's only a 5.5 million share float. Oh my goodness. Anyway, the numbers on Dillard's this morning, EPS was almost $8.81.
Jesus.
On sales of $1.5 billion, total sales up 72% year over year. That tells me nothing at all because last year sucked. But anyway, low float stock. It can do crazy things.
It's been squeezed before. It's, been a stock that I don't get it. To be honest with you, I don't get the move. This move is extreme. These stores are just enormous. I don't get how this department store, it just continues to, defy gravity here. I don't understand it at all. This is not the kind of stock that I would be thinking would be making new all-time highs. It doesn't really make any sense to me. So I just don't trade it for that reason. I know, I had the preferred for a long time, the DDT, and I love it that way because it just keeps paying you. And, it's a 7% yielder right now, the DDT, and it appears that the company isn't going bankrupt anytime soon. So with the stock making new all-time highs. So I do like their preferred DDT back near the 25.5 level if you're able to get it back there. But this DDS, I don't get it. I try not to trade it because I just can't grasp it. It's one of those that I feel like the fundamentals seem pretty good, but I don't understand why.
If you want to target the pre-market high is 214.50. It's up on less than 10,000 shares.
It's always lifelong.
Yeah, you backed off. This
is a wild child.
Pass on that one.
Yeah, you know what? It's a good pass.
What about Utz? That was also a question from Rocket, who was talking about this in the Benzinga.com chat. They had earnings this morning. I want to look at if they said anything in there about inflation. Let's just do a control F for the word inflation.
I got stuck long this thing into the report. I was playing around with it last night, and I was like, I got stuck with that. It reported. I knew it was crappy. I averaged out in the low 20s. This is why you take losses. I got the report came out at 6:30, and I was like, it's not good. It wasn't really trading any volume. I was able to get out of some in the mid 20s, and then I got out of the rest of it in the low 20s. It was a good sale, and sometimes sometimes it can be a good trade can actually be a loss.
Yeah, which stock is that?
This is UTZ. So the numbers were not great, and they are blaming inflation right there at the top of the release. It says demand remains strong. Our second quarter margins were significantly impacted by higher than planned inflation across key input costs, which include commodities, transportation, and labor. So they are blaming big bad inflation for their quarter.
Yeah, that's what they're doing. And you know what? I did not want to be long this going into the quarter either. Like I said, people ask you how do you get stuck, in a stock. Well, you're doing a lot of different things. Sometimes you miss that a company reports. There's lots of different reasons. When I trade, 200 stocks a day, sometimes you just get you're in it and you're after hours. You're like, I'm trying to get out of this. There was no bids last night. So I was like, I just wanted to get out of this before the report. And, then I got lucky, that I was like, I read the report and there was still some stale bids, like not stale, but people just randomly bidding in the low 20s. And I was like, you know what? You got it. Cause this report wasn't great. I actually probably should have went short. But I got out of my long. I was happy to lose 50 cents on the trade because obviously now it's down $2.15. So you got to try to figure out how to minimize the damage when you're on the wrong side of a trade. I minimized the damage well on this one.
If you want to buy it at the December low, this is your opportunity. 1871.
Why? Why do you want
I
to
said if.
own it?
Because you like pretzels, Dennis. Jeez. Shit.
And if
This
you're
was a Kramer darling, wasn't it?
I don't
Wasn't
remember.
this odds like the Kramer stock when this was back at 28 and 30? Correct me
I
if
have
I'm
no
wrong,
idea.
chat,
I
but
don't
I think
know.
this was a Kramer darling.
It's possible.
Two
I feel
monthly
like it.
lows.
I'm going from
It's
selected, maybe it's selected perception.
1665. That's your October, November lows. But looking like no one's not showing a lot of buying interest yet. But I'm gonna let you guys finish up here. I'm gonna hop over and cover all the symbols we missed. But good show, and we'll catch up with you later on, Spencer. Dennis, go get them.
Dennis, before we let you go, we were talking about this before we hopped on here. It's a big day in dividend land. A lot of companies going ex-dividend today, and I want to just run through that list here. What I will do is share my screen and pull up the dividend calendar in Benzinga Pro. What Dennis can do is go off his list that he has probably in his head somewhere.
I write down the big ones.
Okay.
I always know when a stock is going ex-dividend because, you know, I know I'll talk about these types of trades, you know, in our webinar on the 21st. Is it the 20th or 21st? Saturday, on the Saturday.
It's next Saturday. It's the 21st.
Next Saturday, the 21st. We'll talk about this stuff. But, you know, I know that there's positive alpha to extract when a stock, and when not like a stock's giving a 10-cent dividend. The major dividend players, like, you know, like the AT&Ts and Verizons are extreme examples. But there's a positive, you know, expectancy of extracting alpha if you own them before the ex-dividend date, and then they tend to show weakness after. So what I like to do is own them into the ex-dividend date and then sell them and potentially sell them short even after they go ex-dividend. So these are big days. This is one of my core strategies, is extracting alpha from dividend inefficiencies. And, you know, we're using the Pro. You got a good tool here. But, you know, just to highlight a few, this McAfee, MCFE, paid its special dividend finally. It's been, you know, known for like a week and a half here. And it's been going and running up. And now it had earnings too. So I know you got to say that. But you can clearly see it's been very strong into the ex-dividend date. Now it's getting hit here this morning because obviously you got the price adjustment. It's actually trading in the red, I believe, by 10 cents this morning here now, which is what you usually typically see. You usually see weakness afterwards. But positive run up into the $4.50 dividend. Another one, Duke Energy, you know, which is a utility stock. It's run up here the last few days. And, you know, some of this is just to do with XLU, but some of it's also to do with the ex-dividend date. It ran up, had a 99-cent dividend that it paid here overnight. I participated in that. Honeywell, another one running up. I still got a little position on that one. But you can see it paid 93-cent dividend. ExxonMobil, I played that one. It had an 87-cent dividend. ExxonMobil worked really well. I took it into the ex-dividend date, and actually it was trading up this morning, so I was able to wiggle out of that one too. But, you know, a little bit of dividend capture mixed in with the positive alpha expectancy from owning them ahead of the thing, and then trying to, you know, get out and make some money on the weakness afterwards. That's how I kind of play them.
All right. Something to be aware of as always, Dennis. Talk to you tomorrow, man.
A lot of different ways to make money in this market. Most of my strategies are revolved around quantitative edges, not charts. I mean, we're going to do this, you know, webinar here, and Joel's our technical analyst, and obviously he's going to talk a lot about charts, you know, in on the Saturday. But we're going to also have Rob Friesen, who is obviously the president of Bright Trading, and what he tells his traders, he actually did. And you know, he's going to talk there too. But he was telling us, you know, last night, you know, he was doing a presentation to new traders, and he made them turn off all their charts, so you can't look at a chart. So you know, and then he's telling you about different, you know, edges, quantitative edges that aren't revolved around technical analysis, because you got your fundamental traders, you got your technical traders, you got story traders, and then you got your quants. Bright Trading is more of a quant firm where we're looking for quantitative edges in the data. And that's what I am too. I'm not really a technical trader. I like charts. I respect charts. I use charts. But for the most part, most of my big money is made from quantitative edges. And that's what we're going to talk about on the 21st.
All right. Link in the chat. Dennis, thanks as always, man. All right. Let me bring on the Einstein of, well, there he is. Peter Tuchman, the Einstein of Wall Street. Good morning, sir. How are we doing?
What's up, Benzinga Nation? Let's go.
What is the mood down there on the floor of the NYSE?
You know what? Today it's a little bit quiet. We've had a couple of big IPOs this week. Yesterday, Joby, this sort of ride-sharing drone meets helicopter story that came out, and it's going to be available on your Uber app. It's sort of like the Jetsons meet, you know, 2021. It's kind of super cool. But it's sort of been, you know what, we talked about it a few weeks ago. I didn't think there would be sort of a quiet period, but there is. It's sort of like mid-August. It's hot. You know, I'm not sure every day everybody's focus seems to be a little bit different, whether it's me, whether it's earnings or whatnot. As you've seen, the market's been, though it never really trades kind of flat, it's been definitely range bound.
Well, it's hard to focus. You've got Olympic athletes on the floor, you know, hanging out with you guys. It's hard. It's probably hard to focus with when you're hanging out with Olympic athletes.
Spencer. You know what? Look, these are some of the things you do. You know, one of my roles is the ambassador down here to have, you know, to host people down here, to invite them down to experience this thing. One day you'll come in from Chicago and hang out on the floor with us. I'm here with the group from Nico, New York Nico, which is sort of an amazing Instagram group. It's, you know, what's great about this place is still that human element. I know it doesn't exist that much. It's not what it once was, and surely globally it's more an electronic marketplace. But what we do here, whether it's the roadshow for IPOs, whether it's just trying to give that symbolic and that sense to people, and I think it helped a lot during the pandemic, that there are humans between, you know, the markets and the world. That's what we do here.
Okay, tell me about a stock that is on your radar, that is interesting to you right now, that you've been watching, or the action at least interests you.
You know what? It's hard to know. You know, I can't really particularly pick a stock.
Okay.
But I think, look, once again, I'll go back to the spiders because I find them fascinating. You know, look, obviously on a day-to-day basis, we're looking at the reopening story stocks. To be honest with you, one of the most incredible stocks lately that I've been watching is Moderna, right? You've got to watch it. You know, look, there are stocks that are trading as a earnings story. There's stocks that are reopening, stay in place, shelter in place, volatility, vaccine, virus stories. But the Moderna story is incredible. The move that it's made, you know, it's gone from being a company that a year and a half ago was trading at $30. It is obviously one of the preemptive vaccines, though the vaccine per se may not be a really great business model. The stock, you know, got into the 200s, obviously through its incredible rise during the pandemic. And then it suddenly became a meme stock, right? A meme stock to me has now gone from the GameStops and the AMCs of the world to really just stocks that get everyone's focus. It's like, where is the herd going to go today? And as you know, I have nothing against the herd. I love that they're all here trading the market. But, you know, we did see this stock go, you know, 100 points over 2 weeks coming into earnings. Earnings came out, it faded a little bit. And then you would have thought there'd be a little pause in consolidation, and it went up another 100 points. And then within a day, there was this 50-point turnaround. You know, I know with David and Wall Street Global Trading Academy, we talk about Moderna a lot because the moves are very technical. They're huge on the long side and the short side. We saw a far from moving average trade intraday on Moderna where there was a 50-point profit in it. You know, not everybody obviously waited around for that kind of a move, but we've seen it overbought. We've seen it oversold. We've seen it break out from trends. So if there's any stock that sort of highlights what I do, what David Green does, what we do at Wall Street Global Trading Academy, is this stock has highlighted the amazing ability of technical analysis to give you a little edge. Because if you don't use it, there are people who bought into this stock. I posted a thing on Instagram the other day, you know, those 5 trades that everyone thought they should have gotten into that have turned out to be fairly ruthless, like, you know, buying GameStop at 480 or Dogecoin at 70 cents, you know, or shorting Moderna at 250. You know, these names are dangerous names. But surely, you were talking about it with Dennis before, everybody has a different strategy here. For me, in this market, it being not your grandfather's stock market, you need to have technical analysis to be the preemptive thing in your toolbox.
Here's a question from Solar Up in our chat. He's referring to a specific symbol, but I think it can be applied more broadly. When you see several days of massive volume, unusual volume in a given stock, I'm talking like several days or even a week or more, in unusual volume in a given security, whatever, stock ETF, what does that indicate to you? I mean, does that indicate to you like retail interest or institutional interest, or do you not think of it like that?
So look, volume is not something that David uses in Wall Street Global Trading Academy. although it is a contributing factor to some of the other technical targets and signals that we put out. From me as a trader down here, I don't use technical analysis for a lot of the trading models that I trade. Volume is a big deal. And look, it can be any number of things. We've seen volume spikes due to this new incredible generation of young traders, the 40 million plus, whether it's through Robinhood or TD Ameritrade or whatever it is, who sort of gang in and herd some of these stocks. We've seen volume that were, look, that day in AMC, where it went from 40 back up to 72 and down, 500 million shares traded in a stock that, a year ago was bankrupt, right? So the volume can be any number of things. It could be a large whale taking a big position in the stock. It could be a stock that the internet is memeing out and that everybody's rushing in to either buy, short, or sell, right? It can be just, an earnings play. It could be option layoff business. It's in the old days, you used to be able to pinpoint why volume was in there, whether it was news headline related, whether there was a big fund taking a position or whatnot. In today's world and today's market, it could be any number of things. So it's a multifaceted situation.
Okay, and then just broad market here. We're just doing what we do, and we're making new highs seemingly every day. Enough about the broad indices, but looking at individual sectors here. What are your thoughts on where we've been in? You can look at healthcare, you can look at tech. Do you have a favorite or least favorite at the moment?
You know what? No, I actually not. And right now, I'm actually not picking one because things are sort of trading at this little bit of a divergence, whether it's the Dow being up on some days and the Spider's a little tamped down, whether we've got an up Dow day, and a down NASDAQ day or whatnot. I think we're in sort of a strange consolidation mode here in August. August historically tends to be one of the quieter times. Okay, we know that, and you talked about it. We actually are seeing a volume abatement in some of the overall names here in this week or so. My business has been a little slower than usual over the last couple of days as the closing volume has sort of been quiet. But I kind of think this is an evolving, unfolding story. We've not seen a big catalyst in a market that's going up or down since about a week now. So what does that mean? That I think any day it's going to happen, whether this virus sort of levels off and it's not going to be a big deal, or whether we're going to start seeing shutdown. If we start seeing shutdowns, we're going to see how it affects airlines, how it affects cruise lines. Some of these guys have had a couple of false starts, right? Because we saw this reopening story happen. Everyone was excited. And then we sort of stopped over the variant. So I think we're going to play it a day at a time. And I'm not really clear directionality right yet.
Peter, do you think the market is, or how concerned do you think the market is about the Delta variant? We were talking about this yesterday. Dennis seems to think the market is concerned. Joel and I don't think the market seems to be that concerned at all, frankly, about the Delta variant. How concerned do you think the market is about the Delta variant?
The market tells you what it thinks of it. The bottom line is the variant is bad. The news that I've gotten is we're seeing things start to shut down. We're seeing an acceleration in the speed that it takes people to get sick. I spoke to a doctor, a frontline ICU doctor at NYU the other day, who just said that what we're seeing could be as worse than what we saw in March 2020. So that's the reality of the variant. Globally, it's a big deal. Does the market care? Of course, we do as humans care, but is the market reacting in any kind of a anxious, fearful way? It doesn't seem like it to me, because every day we keep closing at record highs. So while the market should, individual sectors should, the market overall seems like there's fuel behind it. I will say that the one thing I think that may dislocate this is, once again, we spoke about it last week, Spencer, is the unwinding of the balance sheet story, and a matter of when the tapering is going to start and how much advance notice we get from it. That to me is the most interesting story, and when we start to get that info.
Peter Tuchman is known as the Einstein of Wall Street. The link to his trading academy, Wall Street Global Trading Academy, is in the description of this video, as is his Twitter account. Peter, always a pleasure, man. Get back down on the floor.
Guys, check it out.
All right. Have a good one, Peter.
Bye.
All right. It is 9:15. I'm going to hop off. I'm going to end this stream. See you over on our next stream. We are live day trading at the open. Myself, Mitch, Ryan Faluna, Zunaid, the whole gang will be there. Going for about an hour, and we'll have some fun. So hang out and smash that like button first, And thank you very much to our guests today, Peter and Ryan. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. All right, I'm ending the stream. See you guys over on our next show, and let's trade.